What's up, you guys? It's Humphrey. So tomorrow, Tuesday, the first Bitcoin Futures ETF is set to debut on the New York Stock Exchange. But is it really all that good? Now, the ETF itself is actually a futures ETF, but the media has been really buzzing with the term Bitcoin ETF, and that's really noticeable with all the headlines this week. For example, this one from the Wall Street Journal, which says ProShares readies Bitcoin ETF for launch. You have another one from CNBC saying that the first Bitcoin Futures ETF in the US is set to begin trading next week. And lastly, another article from the Journal which says a Bitcoin ETF is almost here, but what does that mean for investors? Now, in today's video, we're going to be covering all the details of this new Bitcoin ETF, what it might possibly mean for the price of Bitcoin and also altcoins, and then everything else you need to know about the product itself. So I think there are some reasons to be a little bit skeptical of the new Bitcoin ETF and its impact on the price of Bitcoin, and that's simply because a lot of people are overlooking the fact that this Bitcoin ETF doesn't directly own Bitcoins. Now, in a normal S&P 500 ETF, let's say, the fund takes your money and uses it to buy the 500 or so stocks in the S&P 500. So let's say you put $1,000 into an S&P 500 ETF, that fund would take your $1,000 and you would get a percentage of Apple, a percentage of Tesla, Google, Microsoft, etc., all the way down the line for the 500-ish stocks in the S&P 500. Therefore, your money is directly going toward the ownership of these stocks. So when you own the shares of an S&P 500 ETF, the fund just collectively takes your money and goes and buys those stocks. So therefore, when a company gets added to the S&P 500, for example, when Tesla got added to the S&P 500 last year, that was a direct impact in Tesla's stock price. By being added to the S&P 500, index funds, ETFs, and other index strategies that track the S&P 500 needed to buy at least $78 billion worth of Tesla shares at the rebalance date valuation. So as you can see with the direct ownership S&P 500 ETF, that means a lot of money will actually flow into the underlying asset. But this Bitcoin ETF is known as a futures ETF. So for those of you that don't know, a futures contract is a type of financial instrument used to bet on the future prices of things, hence the name. It's used most commonly in commodities trading, for example, for oil, but a futures contract is an agreement to buy or sell something at a specified time in the future. So that means the ProShares Bitcoin Futures ETF doesn't actually buy or hold any Bitcoin. Instead, it has a loose correlation on the price of Bitcoin. In fact, even if you check the ProShares amended filing for their ETF and you scroll down to page 4, you'll actually see that they directly state that the fund does not invest directly into Bitcoin. So then the question is, what will the Bitcoin ETF actually do with the money that's being invested in that fund? Matt Levine, the author of Bloomberg's Money Stuff, who's infinitely smarter than I am, sums it up quite well in his article, which I'll link below, but he basically says the following. Number one, the Bitcoin ETF will put about 30% of the money into a collateral account at a US registered commodity futures exchange to collateralize positions in cash-settled Bitcoin futures. And second, it'll put about 70% of the money into money market securities, treasury bills, or high-grade commercial paper, or whatever. He goes on to state that the mechanics of the Bitcoin ETF is that it will hold synthetic Bitcoin that is comprised of cash plus a derivative. Now, I know that this sounds like a lot of jargon, but you just have to know that the ETF doesn't hold any physical Bitcoin, and because it doesn't hold physical Bitcoin, it needs to go through different types of middlemen and arbitrageurs to basically have the service to track the price of Bitcoin. And the middlemen are actually going to charge that ETF a pricey fee for that service of tracking that price of Bitcoin, and therefore those costs are going to be passed to the customer. Quote, futures-based ETFs are vulnerable to divergences in the prices of the futures and underlying assets that they track, in this case Bitcoin, which is notoriously volatile. ETFs may also lag the performance of Bitcoin if it keeps rising. So that's basically the gist. The Bitcoin ETF isn't as efficient as just simply buying the Bitcoins themselves. And that poses a pretty interesting question, because why doesn't the ETF just buy Bitcoins itself? The answer is pretty simple. It comes down to SEC regulation. So the SEC has an easier time regulating Bitcoin futures trading on US future exchanges, whereas it has a harder time regulating physical custody of Bitcoins. So that's why the ETF can't buy Bitcoins itself. Now, for retail investors, why not just buy the Bitcoins yourself? And that's the same question and basically conclusion that people are going to come to after they do just 5 minutes of research on this Bitcoin futures ETF. Now let's talk a little bit about the short-term price action that I think might happen. Now, I don't really have any sophisticated thoughts here. I'm just a random dude on the internet, but it's my general opinion that if the media starts to cover the Bitcoin ETF a lot and hype it up a lot, then the money is going to start pouring into that fund. And if that happens, that could send the price of Bitcoin well over its all-time highs of $64,000 per coin. Now, if it actually does do this, I think we're going to start to see the altcoins also follow in a 2 to 3 week lag or delay period, as that's the general pattern of things that I've personally seen this year myself. We're also going to just see a lot of euphoria and a general pump in the entire crypto market as a whole, especially if Bitcoin can touch the $70,000 mark. Now, if we don't see the widespread adoption of this Bitcoin Futures ETF pretty quickly, then we actually might see Bitcoin correcting and coming down back down to prior levels, closer to what we were at maybe at the beginning of the month, so maybe around 50K. Of course, this is just me speculating. I don't know what's actually going to happen. That's just my thoughts internally, so take that for what it's worth. So what will actually make this ETF successful, and what would be the criteria for that success? Well, I do have a few main points that I think that the futures ETF needs to hit if we were to deem it successful. Number one is widespread adoption. So the ETF is definitely a step in the right direction of having cryptocurrencies be adopted even further. But the thing is that it's not that hard to buy crypto for most young people, and even older folks that are kind of savvy with a mobile phone can buy Bitcoin directly already. We've already seen that most mobile apps like PayPal, Cash App, and Coinbase are already allowing people to directly get exposure to Bitcoin in a pretty seamless and frictionless way. And in terms of institutions, the institutions that want exposure to Bitcoin can already do so with Grayscale's Bitcoin Trust, which already tracks the price of Bitcoin. So therefore, where else can adoption really come from? Well, I would think that if Fidelity or maybe Vanguard added it to their fund holdings, it could be the case, but that's something I'm sure they're going to be a little bit hesitant to do really quickly. The second criteria for success I see is that if the initial trading volume is really strong for the Bitcoin ETFs, then we'll likely see a run-up of the Bitcoin price as well, simply because of the hype that there is an ETF you can buy in your brokerage account now. Most people that don't do any research will not be smart enough to basically figure out that they're trading a futures ETF and not a direct ownership ETF. I'm sorry, I'm just saying I personally don't think that this ETF should directly affect the price of Bitcoin at all, but as we all know, the market is a little bit irrational and made up of millions of people that may or may not know better. If you remember back in October of last year when PayPal said it would start to adopt Bitcoin, the price of Bitcoin slowly shot up because of institutional adoption. So this ETF could really be a step in the right direction, especially if that direction is towards a direct ownership ETF of Bitcoin in the future. The last criteria for success I see is that if it starts to get more total assets than the competitor products that are out there, then that could actually make waves in the crypto market. Right now, we have GBTC, which is Grayscale's Bitcoin Trust that physically holds Bitcoin that people can invest in, but that's not really an ETF. It's a trust that trades over the counter and actually has a large management fee of 2%. GBTC has over $36 billion worth of total assets invested into it, so that's quite a lot. Now, some of the other products, such as the Purpose Bitcoin ETF in Canada, that has about 1.4 billion US dollars under management, and that one actually does use funds to buy and hold Bitcoin. But even though Canada adopted it, it's not a US ETF, so it's not as widely traded on global exchanges. And lastly, there are some mutual funds and index funds like Bitwise's 10 crypto index fund that has a market cap of around $1.2 billion, but it holds a variety of cryptocurrencies, not just Bitcoin. So if the total assets that flow into a Bitcoin futures ETF is competitive with these other products after say 30, 60, or 90 days, I would deem that as a success as well. Now, if you've gotten this far in the video, you should know as an individual investor, I'm not super excited about this futures ETF. It has a really high management fee of 0.95%, which is more like a mutual fund expense ratio, and it won't track the price of Bitcoin for you on a one-to-one basis. If I were personally looking at deciding between this ETF and just buying Bitcoin directly or even investing in GBTC, I would probably do the latter two, and therefore my suggestion is that if you do want exposure to Bitcoin, don't buy the futures ETF, just buy Bitcoin. The only reason that this ETF might have any significance is that it could really bolster the public perception of Bitcoin. And if you don't really think that matters, it actually does matter. So I touched on this earlier, but one of the biggest reasons for Bitcoin's price run up this entire year was the constant fuel that different companies and the media kept adding to the price. And they did so because each institution that adopted Bitcoin would always get covered in the press. For example, PayPal was one of the first to adopt Bitcoin back almost 1 year ago, and then other companies started to follow suit, like Tesla buying Bitcoin and Square adding Bitcoin as well. And having all these institutions add Bitcoin to their balance sheets is really bullish for Bitcoin overall, especially when the media covers it like crazy. So back in October of last year, the price of one Bitcoin was around 13K, and as you can see, it's just been going up and to the right ever since because of this institutional adoption. So while the Bitcoin futures ETF itself might not be successful, perhaps if we define success as something a little bit different, perhaps if we defined it as getting closer to the complete adoption of Bitcoin in the financial markets, if that's the case, then perhaps this ETF has done its job. Only time will tell. We aren't too sure. Hopefully you enjoyed this video. Let me know your comments below, and I'll see you guys in the next video. All right, peace.